Thank you for staying with Benchmark. In the Voice of Business today, we focus on the continuing volatility at the Colombo Bourse, despite measures having been taken to stabilize trading. We also discuss whether the rupee's free fall is affecting the equities market. And where is the market headed over the next few weeks? Here's Anushan Selvaraja with more.
Welcome to the Voice of Business. Joining me on the show this week is market analyst and LMD columnist Hasita Premaratna. Now, Hasita, we continue to see volatility on the bourse despite the measures that have been taken to stabilize trading, if it is possible. What is your take on this?
Yeah, I think if you look at the last few months, the market has been, or the all-share price index has been hanging around 5,400 to 5,500 range. So it's kind of a narrow range. It's not a very wide, high volatile kind of a range we are talking about, but there have been a kind of a volatility in the index within that narrow band. And also the smaller stocks, the penny stocks which used to sort of create this kind of heavy volatility have been somewhat silent. Even after the Securities and Exchange Commission lifted the price band, still we can see that the volatility has kind of not gone out of hands like to the days it used, the way it used to be. So I think overall the volatility has reduced and the market sentiment has kind of still been negative, and also from a turnover point of view there is a significant drop in the activity level in the market in the last few months compared to maybe what it used to be a year ago.
How is the rupee's free fall affecting the equities market, if it is, and also would this mean that the prospects of foreigners entering our markets are now brighter?
Yeah, because if you look at from the foreigners' point of view, obviously there is a kind of a positive thing about the rupee depreciating, at least for the people who have not entered as yet, because now for their dollars they get a higher amount of rupee value. So naturally, from their point of view, the returns would be perceived in a positive direction. However, what is even more important is how the rupee would behave in the future, because an investor who comes today and maybe convert his dollars into rupees at 132 or 131 rupees will always wonder whether it will go back to the 120s, 25 range, or whether it will kind of go back to the 135, the 40s. So there is still a lot of uncertainty in the forex markets if you look at in the current context, and that volatility probably could and the uncertainty could probably keep the investors, foreign investors, away for a while and put them into a wait and see approach rather than just making them to dive in at these levels. But definitely they do get a better rupee valuation for their dollars in the current circumstances.
How do you view the recent sale of the Century by the EPF and the fact that this has substantially increased inflows from overseas?
From a country perspective, from a trade deficit perspective, I think it has obviously helped, because we saw about almost 14 billion rupees worth of dollars came into the country for that John Keel's stake that EPF divested. So from a country perspective, I think it's a good thing, but from a market perspective also, I would say it's a good thing to have more foreign investment coming in. But having said that, I think it should be a pure investment decision to divest if you take EPF's standpoint, because EPF is a private, it's a fund management institution who has all the private sector's pension funds. So they should be managed in a more profitable way. So if that decision is a correct decision from an investment perspective, I think it's good. But if it's purely driven by the country's interest and the current trade deficit situation, I think then we have a little bit of an issue to look at. But overall, I think what is important is that to create the foreign interest, and if the foreigners are willing to buy, I think it's not only EPF who should be selling, but maybe at the right price you might see investors divesting as well. So price is an important factor, and in the meantime how attractive the current valuations of the foreigners is even more important.
Where do you see the market heading in the next few weeks?
Yeah, I think the volatility in the narrow band will continue, and I don't think there will be any significant improvements in the market activity levels. There will be a little bit of an improvement, but not major improvement. But broadly, I think the investor interest should be towards more accumulation of fundamentally sound stocks, because we've seen in the last few months that the investors as a whole looking at more fundamentally sound counters, and in particular the Milanka turnover in the Milanka index has been higher than as a percentage of the total turnover compared to what it used to be maybe in the last 12 months. So this shows a trend that there will be more interest on the blue chips. And I think what the investors should be looking at is to ensure that you focus on the fundamentally sound, good growth stocks which have stability to weather the current economic situation, and then obviously take it to the next level with the next 2 to 3 years of medium to long term growth potential. So overall market may not move significantly up, but it will stay in a narrow current range. There'll be a little bit of volatility, but I definitely don't think that there will be a significant improvement in the next few weeks.
That was Anushan Selvaraja in conversation with Hasita Premaratna. And that wraps it up for this week from the Benchmark team. It is goodbye. Thanks for being with us.